Good morning, folks, and welcome to today's video. So today I have just the one pair on watch, and that is Swiss yen. So I'm going to talk you through my thought process on that pair in a second. But just to start with, I'm going to touch on why I took pound Kiwi off of watch. So if we just load up pound Kiwi. Yesterday, if you remember in my video, if you were watching that, I said that we don't need to necessarily know what's going to happen next to make money or to capitalize on these moves. And this is a prime example of why we look for the patterns that we do, why we typically look for tight flags within a structure. Because I've said before that the correction within a tight flag is the confirmation that we look for to determine whether price is going to move in one direction or the other. So if I just touch on that. So yesterday, I'm just going to break this down very quickly. We saw that we broke above this sharp hook point here. We broke above, broke back in, and then I was looking for, if you remember, flags on the lower time frames, okay, for that impulse correction continuation to push lower, okay? So if I just show you that lower time frame, I said that we had this piece of structure here. Now, just because something is a piece of structure, a completed piece of structure, it doesn't necessarily mean that it's going to reverse from that area, okay? So previously I had my area of value on there, and I had this piece of structure here, and I said to you that we had this impulse correction continuation, giving me a clue that this is potentially a piece of structure. More often than not, these ascending structures that line up with, for example, this area of consolidation which price sold off from last time around, more often than not, they do reverse to the downside. However, just because something is a completed piece of structure, you can see we've fulfilled the impulse out of the continuation leg out of an impulse correction continuation tends to be of a similar length as to the preceding impulse. Okay, so that's why I've just measured that and put that there, and you can see that we fulfilled that move once we reach this area here. Okay, so more often than not, these do push to the downside, but sometimes they don't. And one of the reasons that, especially when we're up here like that, one of the reasons I was waiting for a push down and a flag, so if I just take my forecast off of the charts, I was looking for this, is because this correction afterwards, if we do, you see we were pushing down here, this correction afterwards, which I would have filtered on the 15-minute chart, would have been the confirmation that I would have looked for that price isn't going to do what it subsequently did, okay? Push up like that, okay? So if any of you were trying to use my videos as a signal service, which people have done in the past, and then blamed me for you losing money, well, my entry criteria wasn't actually met. So whatever you were trading, it certainly wasn't what I was looking for. Okay, so we pushed down. There was no correction here. There was no flag with two tops and bottoms that broke, that formed below this area of value, below this line, and that was what I was looking for. You can see, so if you'd have just got short just because price was in this area, you would have been tagged in and tagged out and probably taken a loss. Okay, whereas I was waiting for this because the correction is usually the confirmation that the bigger players are just stacking their orders for the next leg lower. Now, we didn't get that. We tapped below here, but there was no flag. Price pushed up. So I've just taken this off of watch. So it's a nice, simple way that we can trade. And I'm not going to try and guess what price is doing at the moment. We could be coming back down to form a bull flag to push higher, which I wouldn't actually be interested in. So if price is coming back up here, then what that tells me is that there was not enough liquidity here in this area or wherever price rejected from to send price to the downside. So I simply take this off of watch. So it's a nice and simple way to trade. But I just thought I'd take you through take you through my thought process as to why I took this pair off of watch and why we typically look for the tight flags that we do. Okay, so that is pound Kiwi that has been taken off of watch. So Swiss yen, I'm not necessarily anticipating this to shape up by the end of the day. Again, it's not about being right. Do I think this will shape up by the end of the day? Probably not. But because all of the other pairs that I have in my top six and in my wild cards, if I just switch to that to give you an indication of what that looks like. So this is my top six. I do this every Friday. So I'll be selecting my top six and my additional pairs tonight. This is something I do for the week ahead. I do it every Friday night. We've got the DXY there, which is the dollar index, and we use that to determine the overall strength and weakness of the dollar. which helps us with dollar related pairs and often euro related pairs as well, because that is the DXY is heavily correlated against the dollar strength against the euro. So it looks that's why it looks very much like euro dollar but on the inverse. Okay, so if I go back to my main focus, or yeah, just all of those pairs in my watch list and in my additional pairs look like they need much more development. So I've kind of got this on as a bit of a loose play, a bit of a wild card, a bit of a, it may shape up kind of entry. But why am I looking at this? I'm looking at this because we have this area of value here. Okay, we have this all-time high. Okay, we're at this. If you just scroll left, we are at an all-time high. Okay, so where do you think? The first question I ask myself is: even if you knew nothing about trading, let's say you knew nothing about trading, and I said to you, the bigger players have ridden this move to the upside. Where do you think they're likely to get out? Where is a good area for them to take profit? Where is a good area for them to get out of their positions? I think even with no knowledge, you might say here, okay? And then you might think to yourself, well, why is it broke higher? Well, as I've touched on, as I touch on regularly, when people see these, especially all-time highs, so typically higher time frame highs and lows, but especially all-time highs and lows, these all-time highs are typically where people get caught the wrong side of the market. Okay, if you just look at what price has done, we've had this overall corrective move up, corrective move up, corrective move up. It breaks the high, and then suddenly we see this. Now, why is that happening? Well, one of the reasons it could be happening is because the brokers, the news platforms, etc., have been putting out messages in their ticker feed saying that Swiss yen at all-time high. And as I said yesterday, if you're trying to get rich quick, or you believe what was previously resistance becomes support once it's broken above, what are you going to do, okay, when price breaks above an all-time high? You're going to start buying, okay, because you think it's going to keep going. People attach themselves to the market, so they say things like, in their mind, they say things like, the market is going without me. It's not going without you. It doesn't care what you're doing. The market doesn't care what you are or what you're not doing. The market is just doing what it's doing. But people say things to themselves like, the market's going without me internally, so they start buying, okay? And what have we seen in the majority of cases? We typically see price come crashing to the downside, especially at all-time highs, okay? What are other reasons that make me think that? Other reasons are that we have a near miss. What have I talked about previously? We have a move down that gets close to this low, which we can see on the daily chart, but doesn't quite tag it. What then happens? Price comes all the way back down, gets close to this area of value and this area of value, and near misses them again, gets close and doesn't tag either of them. It then pushes up. When we see these near misses, so a near miss to that low, which near miss to that low, it is more likely that price will plummet to the downside, okay? So these are just confluence factors. Another thing, which I just factored in just before I put this pair on watch this morning, is if we just measure the impulse, you can measure it from this one or even just this one. Let's take it from what would be the bigger impulse. So let's measure from there to there. So I've measured from there to the top of this range here. And if we assume that this is an impulse correction continuation to push higher, and you can see the corrective move down there. If we just take what I've just measured there, take the measurement and put it there, we have fulfilled that move. And look at this, it lines up almost perfectly. I've not got that. If we just put that down there, okay, it lines up practically perfectly with the close of that last daily candle. So the patterns that we look for, when people say patterns don't work, patterns are by definition something that repeat themselves, okay? And typically speaking, what we see within these impulse correction continuations is that the continuation leg is of a similar length to the preceding impulse, okay? So the point being is that this impulse, although it's somewhat corrective, it's more impulsive than this corrective move down. This impulse has potentially completed because it's of a similar length to the preceding impulse, okay? Hopefully that makes sense, which therefore makes it potentially in prime reversal territory, especially as we have, there's other factors as well, like this bullish candle here, which is typically what we see when people get themselves caught the wrong side of the market, when they believe what was previously resistance becomes support. Okay, so there are other factors. You can see we've moved up here very correctively. we've had that impulsive move out. But these are typical. Now, this could be a bull flag to push even higher. This could be a bull flag to push even higher. So we might be seeing something like this. And if that happens, once again, this is the beauty of how we trade. If that happens, I shall just take this off of watch. I'm not going to chase this trade, okay? But if we get the following, so if I just go to my forecast, if we get the following, if price pushes down aggressively, I do want to see a convincing impulse down because, we are still floating in no man's land to some extent. If we get a convincing push down and then a flag afterwards, which is what I've said, which, as I've said, is the confirmation that we look for, that price isn't just going to suddenly blast to the upside again, then I would look to get short on the break of the flag or within it. Okay, so within the flag, I mean, once we have two bottoms, I would look to get in if we rejected from the first top, and then I'll be able to manage this down to this low. I'm not really concerned about this low too much, okay? The first real target, I would say, is here, because you kind of have, to some extent, not really a structure, because this is a bit of a wick, but we kind of have the base of a correction here, which just so happens to retest this area here. Okay, so we came back down. We have if you look at this, we also have a 1, 2, 3. We have a first drive, second drive, third drive, which just so happens to be the base of this correction here, which just so happens to have retested that high there. So I think that would be my first target, and I would be able to manage a trade if it shaped up as I've forecasted down to that low for something in the region of 7%. Of course, if I got the risk entry within the flag, that would be something in the region of 12 to 13%. And also, just to touch on it, if we just zoom out to the 4-hour chart, we would have then retraced the majority of this. If you look at this impulsive 4-hour move, if we had a flag like that, then we would have retraced at least 50% of this 4-hour impulse. And if we just zoom out to the daily, and you look at my risk to reward tool there, if we retraced, we would have also retraced 50% of this daily candle as well. So that would have been what we call a daily retrace. So when the body of a candle retraces 50% or more of the preceding of the bullish candle, then that is a daily retrace. Of course, this red candle doesn't necessarily, it doesn't close by the end of until the end of the day. So, but we would have still retraced over 50% of the body of the previous daily candle. And typically speaking, when that happens, that indicates that this is not a correction to push higher when we retrace that amount. Typically speaking, the cut-off point is 50% max, but typically speaking, if price is going to push higher, it won't generally retrace 50% of a bullish move like that. So hopefully that makes sense, folks. And that is my thought process around these pairs. As I say, trading is not about being right. Okay, you can be wrong. Okay, the majority of the time, and still make money. So what I mean by that is that price could play out to there, and I could make, if I was trailing my stop, like 5% or something like that, and I could do that consistently, and then price could just blast to the upside again once I've made 5%, and I could do that consistently and still make money. Yet all of my higher time frame forecasts, if you want to use the word wrong, are wrong. Okay, so that's why we don't need to be right to make money in trading, which is a really difficult thing for people to get their head around. But of course, if your higher time frame analysis and your which direction you think the higher time frame move is headed in is correct or accurate more often than not, then obviously that's going to help you to make money. There's no denying that. But just a slightly shorter video today, folks. And of course, I have my alert set there just to see if we can push down below this correction. As I said, that may or may not happen, but with all factors considered, we may get an entry on this. And just to touch on it as well, with all the things that are going on in the world at the moment, normally I would hold positions over the weekend. I don't know if you can hear that in the background. There's gale force winds outside where I am in Scotland at the moment. And the window took a bit of a it sounded like it was being pushed in then. But yeah, with all the things that are going on in the world, I won't be holding this position over the weekend, because you leave yourself, when there's extreme things like war going on, you leave yourself open to gapping and slippage and all kinds of things, all kinds of horror stories which you may have heard about in the past. But that is my forecast, folks. Have a great day. Have a great weekend. Trade safely. Don't FOMO into positions. Don't do anything silly. And I'll see you again in the next video. Thanks for watching.